Welcome to the session. I'm really happy that you guys were able to make it, and I appreciate taking the time. Uh, you should hear fine now. Yep. So just as a quick question, can you tell me where you are in the world? I'm just curious because we've got a good crowd here, and I'm just curious to know where you are. UK, California, Dublin, Canada, Perth, Brizzy, Indonesia, Ecuador, Canada, California, Michigan, Maine, London, Rhode Island, New York, Sydney, UK, Stonehenge, Venezuela, Florida, Adelaide, Melbourne, New York, Chiang Mai, Kansas City, Flanders, Connecticut, London, Chicago, Florida, Texas. Welcome, Connecticut, and New York, Cesar. Great. Santa Barbara, Richard, what a great spot to be. I know it very well. Many, many years there. Okay, cool. So welcome, and you're here, of course, to hear not myself, but Jorge. And I know many of you are members of the forum. Jorge, that's actually his picture right there. I should have put his picture on the registration form so you know who is going to be here for us today. But Jorge is in the Naked Forex Now private forum. He posts his trades. He also will let you in on more information about how you can learn how he trades today as well. But for right now, what we're going to do is we're going to have Jorge show you how he uses a very simple way of fine-tuning his trend trading strategy, and he does it on the 1 hour charts. And for those of you that don't know, Jorge is from South America, and he's a hypnotherapist. He trains high-level sports athletes, and he's a trader. And I think that there isn't much mistake. There isn't an error. There isn't a mistake. There isn't something that's a bit weird. The fact that a hypnotherapist is actually quite good at trading and trend trading, in fact, as well, because Jorge uses his hypnotherapy in his life, and I think that he will tell you that it helps him quite a bit. It's one of the reasons why I really like Jorge, because he's such a positive guy, and I'm very thankful that he's here for us today to help us see how he uses his trend trading strategy. So I'm going to go ahead and give the reins to Jorge and make you the presenter, and looking forward to seeing what you have for us today, Jorge. Thank you very much. Jorge, your microphone is muted. Your mic is muted right now. There you go.
Okay. Hey everybody, how you doing? Thanks for being here. I was speaking to myself. So well, I'm glad to be here with you today. It's really nice to see that you are pretty much all over the world connected right now. I see there's more people from South America. There's people from Indonesia, everywhere, and that's great. So thanks for that introduction, Walter. It's always a pleasure to be here running some webinars with you. And well, today we're going to talk about this on how to trade the 1 hour chart. So I would like to know, doing a quick question, like how many of you trade that time frame charts? Is any of you that actually trade the 1 hour, or most of you trade the dailies or the 4 hours, or what kind of time frames do you trade? Would be great if you can answer. And 5 minutes. So if you can just put there on the box, and I'm pretty sure Walter we're gonna let us know like
Wow.
from
1 hour, 4 hour, daily, 1 hour, 1 hour, 4 hour, daily, 5 minute, 1 and 4. A lot of 1 and 4 actually. Most of the people daily for me says Peter, 4 hour, daily says Raphael. It seems like the most common ones are the 4 hour and the daily. And then there's a big
okay.
chunk of 1 hour, a very few number of 5 minutes, but mostly 1 hour, 4 hour, and daily, I would say. But I think a lot of you are actually trading the 1 hour, it sounds like. I don't know. I don't know if 1 hour or 4 hour is the most popular, but one of those, yeah.
Well, that's great. That's great because I am one of those guys that are not that much into that kind of trading, not because I don't care, but because of the time frames that I use, because of my time zone, okay, because I live in Colombia. So I'm going to explain in a bit why I don't trade that much the 1 hours, but I do when I see a really nice setup. But I'm going to start talking to you why I like the idea of trading the 1 hour, on who, from my point of view, should be trading the 1 hour. The 1 hour for me, it's the chart that let you spot better entry points with less risk on your trades when you are going in the same direction of the 4 hours or the daily charts. And that's pretty cool because lately I've been talking with a lot of people that when start trading has some small accounts, and what happens with this is that sometimes if you're starting with a small account, you can't get the risk of the daily charts just because it's off or is way too much. So for example, let's say that you are in a trade, I don't know, let's say here in this point, let me grab something here, highlighter or something. Let's say this kind of engulfing bar, big shadow, okay? And if you were there and we start saying that you're going to trade it from the daily charts, and we say that, okay, you're going to go short below the low of this bar, and your stop loss, it's going to be all the way up here, and you have 150 pips of risk, then when you start doing your math to see how big should be the size of your position to go into the trade, you figure out that it's way too much pips on the stop loss to take that trade. That would take your risk off, and then you would be ending up saying, okay, I can't take that trade just because it's way too big for me, the stop loss. So if you're having a really nice opportunity on the dailies, but you can't take it because of the size of that stop loss, what would you do so you are not letting pass that signal? And there is when the 1 hour charts go for me. So pretty much what I do to trade the 1 hour, and I'm gonna jump here to my iPad software that I love. What's this? I don't want this. I want this. And let me jump here to Reflector. I'm gonna open here the AirPlay, Jorge, and where it is. Can you let me know if you can see this screen that I'm just scratching around? Is everybody seeing that?
Yes, we do. Yep.
Okay, perfect. That's great. So I'm just going to delete this. And we're going to start like this. So pretty much what I like to do when trading the 1 hour is spot better entry points. And this means that I start looking for setups on the daily charts. Okay? Not sure. Let me know if you can see something else more than trading one and kind of H, because I'm not understanding why there's kind of a delay.
No, that's all we see.
No.
That's all we see.
Okay. Well, I'm going to start writing here. That's not working as I like it lately, so let's do this. Where it is, my text here. So pretty much what we're going to talk today is that we're going to spot naked geisha entries, naked geisha setups on the daily charts and look for entry points on the 1 hour. Okay? Okay, this on the daily charts, boom, here. Okay, so this is what we're going to be looking today. How many of you are familiar with the engulfing candles, big shadows, and kangaroo tails? Because this is pretty much the base of the system. No, there you go. Yep, you're familiar with it. Okay, so that's great. So pretty much what we're going to start looking here is start finding out on the daily charts. Spotlight. I don't know if you have seen my videos. I have the other kind of engulfing candles in which I only look for the body of the candle to engulf the previous body, not the entire. So I'm going to go here through the charts and I'm going to mark a couple of bars that are going to be looking good for me. Okay, so this red one here looks good. Arrow, check sign. This green one looks kind of cool. And from there, let's see. This red one up here looks really nice. Let me see, I have, what do I have open? Okay, so this one up here, then also this one right here. Okay, so I'm going to start with these examples at the beginning, and I'm also going to go with this green bar down here. Okay, so pretty much when you are doing that, what we're going to start saying and the analysis that we're going to do is, okay, look what's going on. We are having a candle that it's telling us that the market might turn around. You know, this is kind of an engulfing, kind of in a support level, so the market can turn around. If we try to go above this place, we would have, I don't know, what, 160 pips stop loss, so that would be kind of hard. So what can we do there? So the thing that we do is that after we have the end of the bar, so I'm going to mark the next bar because this is going to show us the open of the next bar or the end of that engulfing bar, and we are going to start going to see from there what happened on the 4 hours and what happened on the 1 hour. So pretty much look how here on the 1 hour, after having that engulfing, we have the moving average crossing up, so we can start looking for 2E trades or naked geisha trades, and we start seeing that the market, it's coming kind of hard around here. Okay, so from there, what can we do on the 1 hour? And we start going there to that point in which on the 1 hour we are going to pretty much have bars like this one that are going to put a lot of steam on our trades, knowing that we can aim for lower stop losses. So look how here we're kind of spotting a 1 hour entry that are going to let us risk around 40 to 50 pips, and from there we can start earning that. Okay, so look here how we were having the engulfing of previous day, this consolidation back, it bounced on the 21 moving average, put a bar that has a lot of steam and start moving up. This was a weird spot in which the market came all the way down, stop us out, and then continue going the way we want, but it's part of trading. I'm not going to show you only the perfect trades because that are not going to be happening all day long. Okay, so if you're following me to this point, I would like to know. Okay, so we are pretty much finding really nice candles on the daily bar, on the daily charts, that are gonna show us or letting us think that we are gonna get into the trade after that on the 1 hour charts, okay? So look here, second example, here we have an engulfing on a resistance. This opened with a gap, so this should be Friday and this late Sunday or Monday, depending on where you are. And from here, look how the market can let us think that same thing, we're going to be looking for something. So look the difference here. We got the cross of the moving averages, markets start moving. We never got a really clear trade on the naked geisha or something like that. So we can start thinking, okay, what we can do on the 1 hour. And let's see this example, okay? I know this sounds very simple. If you're not following, please let me know. I can go easy on that. So look here what's going on. This is the entry, this is the gap, this is the day. We have the market moving down, consolidating a bit, and look the kind of bar that it prints here. Look how the market consolidate. I'm gonna go and zoom in a bit. Okay, look how here the market start consolidating, prints here, a really nice setup. This is kind of an evening star if you like the naked geisha or the regular candlestick patterns, or if you see this simple bar here, it's kind of an engulfing there with a lot of steam, and from there the market start falling down. And look how here, a trade that was pretty much 150 pips, we ended up having an entry that let us think that we can risk 35, 40, you know, stop loss might be above this swing low. If you're kind of risky, you can put it higher than the 21 moving average. And then look how the market, if you were aiming for 40 pips on stop, you ended up giving in a certain point pretty much 80 pips, so it was a 2-to-1, and you can hold that trend, that trade. If you get that better entry on the 1 hour, you can take profit from there, and at the end you can let some profits run on the daily. So if we go back, let's mark the line in which we're going to get into the trade. Where we are, okay, here we are. So we're going to be saying that in this case, we are going to be able to be short at this point. And then when we go to the dailies, look how it was kind of pretty much the same spot, breaking the previous low. We had a shorter stop loss. And from there, if you were holding that trade, you ended up earning around 300. Let's say that you ended up closing here when you had a signal to reverse or something like that. You ended up having 250 pips with a risk of 40. So what the 1 hour tradings are letting you do is find better spots that will put your risk reward in a better place so you can trade the daily charts from the 1 hour, okay? So what we're going to be looking at how a trend can start from the dailies and we can jump in from the 1 hour, okay? It's clear so far? I just want to build it up and then I'm going to start doing the tips on the 1 hours. This is not you know, coincidence that those trades are triggering in that way, okay? So look here.
Just sorry,
okay.
real quick. Just wanted a clarification on the, you know, on the 2E and the naked geisha. People are asking.
Okay.
Yeah.
The naked geisha is kind of a tweak that I made on the 2E, in which I'm not only looking for the inside candles as the 2E on the 4 hour, but I'm looking for patterns of candlesticks in really nice points where the market can simply rotate and give us a better entry. So pretty much, as Walter was saying last time, you can see how the market moves like this. It came here, consolidates, came down, move up, came down, move up, came down. And if you start seeing and looking those entry points, this is the 4-hour charts, but if you start looking at this kind of consolidation points, you're going to find out that after the consolidation, when you get this kind of engulfing bars or this consolidation and this kind of evening star, and you start seeing that the market reacts to the 21 moving average and let you know that the market is getting some steam with those patterns, you are going to be able to trade the trend in a better way, okay? So it's a tweak in which I'm looking more than the inside candles bars that were the two-way system, okay? So the two-way system pretty much says, hey, you were trading down, you had an inside candle that it's a pause. If the market breaks below the low of the mother candle, the candle bigger than the inside, it's pretty much that the inside candle failed. When you go to the candlestick patterns and you read about the inside candles, you find out that an inside candle normally suggests that the market is going to change direction. So pretty much if we are down here and the market goes beyond that, it's going to be kind of a faded inside candle, so that let us think that the market is going to keep going lower. But that happens, you know, not that often, but if you start looking for some other things, as we do on the naked geisha, you are going to find out that you are going to get more trading opportunities there to trade, okay? Clear there?
Yep. I'm with you. Yep.
Perfect.
Yep, we're there.
Okay, so look how this bar here, this sequence of bars were the engulfing. The day ends up here, start moving a bit, start consolidating, bounce a bit times on the 21 moving average, and it ended up moving down. So if we were selling from the dailies, we were pretty much selling on the breakout of these lows with a stop loss here, 140 pips. So we are saying that 140 pips are going to be only a one-to-one risk reward. Let's see what we can find on the 1 hour charts. Let me figure out. That's the October 16. So let's go. So let's go to October on the 1 hours. So look here how the market start moving there, came here, pull back, give you an engulfing candle on the 1 hour, bouncing from the 21, pretty much here. Let me move this where it was. So we are thinking that we can sell around here. We can put our stop loss above that level, 30, 40, 50 pips, whatever you want. And we can start thinking that the first target, it's going to be really close on the same one-to-one risk reward. Look how, if you have patience, how the market let you get in here, start messing around, and with the pass of the days, if you were holding enough, you ended up having here. Of course, that's not that easy, but look here, if we can start seeing on this consolidation, look the bar we have here as another engulfing candle on the 1 hours after a really big period of consolidation that was followed, that was lead by an engulfing, and then look pretty much same thing here. You were able to get in, you will be able to have a 60 or 50 pips reward risk, and then look how you took 250 or 200 pips of reward. So you are getting better risk reward when you can sweet spot those entries from the 1 hour. Okay? It's that clear by now?
Just a question. So like in this example where you have that big shadow marked on the far right-hand side, the entry candle.
Yep.
Um, is it important to you that it closes like lower than all those other candles when the market's kind of consolidating, or is there anything like
This
that
one,
that comes into it?
this one
No, no,
here,
the far right, the last one.
this one.
Yeah, that one. Is that, do you know what I mean? Does that come into the picture
Okay.
at all, or no?
Yes and no. The important thing, and I would start building another step here on building the system, is this candle, not just because close below this other candles it's showing me or telling me something, it's because on when it's happening. And something that it's really fun there is that most of the 1 hour setups, let me erase that and write it in an easier way. I have to change this normal text. So most 1 hour signals are going to happen after London Open. Okay, so more than seeing where it closes, when we start looking for these setups, I don't know if you know, I mean, on my platform, this pretty much says that the London Open is on the bar. So let's say that London Open is the bar at 9 hours or 9, the 9 hour on my platform. So if you see here, let's start zooming in. This is the start of the day. Look how the market start retracing during the Asian, and look this bar. What time is it? 10. So look how London Open prints a kangaroo tail. This is from 9 to 10. Next hour from the London Open, from 10 to 11 hours, it prints the engulfing. And after that, what this is saying is that there's enough volume to think that the market should fall. And it normally falls for the next 3 to 5 hours. So look how this bar ended up here and was the bar from 10 to 11, the second hour of the London market. Next example, this red bar. Look, you have here an engulfing, but look this time where it was. 7 in this was not even the open of Frankfurt. This was still being Asian session, doesn't have enough steam. 8, 9, 10. Same case as the other one, second hour of the London session, bam, markets start falling. And when it doesn't fall during the European, look after that how it starts falling then on the New York session, okay? So when you start seeing that the market is moving, look then what happened here. Market falls, consolidate, prints a wedge, and it kind of here puts not an engulfing but kind of a harami or a dark cloud cover. This bar here, let's see what time it was. 12 hours. So this is 3 hours after the London's open. It has the steam of the New York session. Bam, it falls the next 1, 2, 3, 4 hours. So when you go like that, if we jump to the beginning of this trade and start looking where was our first trade here, let's go to dailies. So the first one, we were there back there in September. Let's go here to February 15 on the 1 hour. Boom. Page down, March. Look, February 15. We got this. market open, consolidates. We have here the engulfing or the evening star. Let's see what time it was. Boom, 9 a.m. This is London open, the end of the first hour of the London session, and after there, the next 5 hours. 1, retrace, 2, 3, 4, 5 bars. Boom, it falls. So the impulse, normally it's at the beginning of the European session. When it doesn't happen there, but we can get the signal during the New York session, would be amazing. Look here, at this point we're only doing it with engulfings on the dailies, but then when you see that the trend is going, look what's going on here. We are in an overall downtrend, markets start consolidating. Look this, wedge, look this, engulfing, or look this, engulfing, and let's figure out which of them would be the good spot to go. 9 hours, this is London, first hour of London trading, red huge bar saying that the market might keep falling, and after that, 1, 2, 3, 4, 5 bars, red bars, 80 pips. If you were risking 40, you ended up having up to 80. And if we start going through the charts on that, we can easily point out that, look here, the market falls, make a wedge, put an engulfing bar. What time is it? 10 in my server. This means second hour of the European session, and from there, 50 pips, market ended up falling from there. So when you start figuring out that you can spot these entries on that time, look here, market closes here. We're now going up because this was the big shadow or the engulfing candle on the dailies. We ended up consolidating, and boom, we have here the engulfing with a lot of strength. What time? 11, third hour of the European session, bouncing off the 21 moving average. After consolidation, bam, markets start moving up. This one was a bummer. This one stopped us out, but it normally goes with that, okay?
Jorge,
so when you...
Sorry. I hate to,
Sure, let me know.
stop your steam, but we have a few questions coming through here. The first one, if you're okay answering them at this stage.
Sure.
Yeah, okay, cool. The first question from Van and David and others is, when exactly do you set the clock in terms of looking for these? Is it after 8 a.m. candle prints in London or after the 9 a.m. candle? I noticed one of them was that it was actually the 9 a.m. candle that was the signal. So presumably, the question is, at what stage do you start saying, yeah, okay, now I'm going to start looking for these? Which candle?
Okay.
Yeah.
The first point is to watch the daily. So this is a new example. So this is pretty much May 18 of 2015. We are up here after having this kind of 3 spikes here. We have an engulfing. So I have an engulfing on the dailies, and this let me think, hey, you know what? I would be able to trade this from the dailies, but look, the risk reward in this case, the risk would be around 180 pips. I can't point that on my account. So I'm going to go, and after this day ends and start doing the Asian session, I'm going to start looking during the Asian how the consolidation is going, and I will say, hey, you know what? I'm going to be awake around the 9th hour on the server, because this would be pretty much the London open for me. So I spotted here that this candle that closes on May 18 might be giving me an entry on the 19th. So I can do 2 things. I can go to the 1 hour, let us see if this July, May. Is this May 18, May 19? What day is this? Let me figure out. I can't, let me see why I'm not being able to watch this. Okay, so here, this is 2011, so I'm way where I shouldn't be. Okay, so let's start going up. October, September, December, November are here in 2013. No, so we have to go. Let me see here. 2014. Page up. This is 2015, I guess. Let me check out here. 14. Okay, no. So page up. January 15. Okay, page up. So we said it was going to be look, here it is, 19. So look how here on the 19, after I knew that this bar was going to be moving, look how the market ended up moving, validating, and giving this kind of signals. In this case, we had two, one here, one there. Let's see which of them was showing us or having the right time. So this was on the 21, so pretty much from the 4, okay, sorry, this is the 4 hours. So here was the start of the day. Sorry, I thought I was on the 1 hour. So this is the start of the day. I'm gonna erase this. We didn't got anything, you know. If you want to trade it as a 2E, pure 2E, you can say, hey, look, this is the inside candle. At this point, it was only the first cross of the moving average, so it was not that smart. So if I'm not having a really nice entry on the 4 hours, I can say, okay, I'm going to jump to the 1 hour, and I'm going to spot the entry there. So look where we are. Sorry about this. I'm going to get rid of this indicator in the meantime just to, where it is, the MA slope alert, delete, close, there. So look, this is the 19, and look how the market start kind of consolidating. In this case, maybe we don't have the signal, it happened there, but this kind of inverted hammer should let us think, and I'm going to here give you another trick. Let's see if that was okay. Look, this bar, 9 in the server, this was London. Sometimes what happens in these cases is that what you get on Frankfurt is a false move. So look how Frankfurt open goes with the green bar, then came London open that engulfed that previous bar on the body. I would say, okay, look, we got that. We got the engulfing, the consolidation, the wedge, the engulfing bar on the 1 hour or the steam bar on the 1 hour. With a lot of volume, you can risk 50 pips, and you ended up having a lot of pips on one bar. Of course, this is not the normal scenario, but just look how you can spot from the daily. So pretty much what we are trying to get, it's defining the trend from the dailies, okay? So let's say this one, down here, engulfing bar, let us think that the market should go up next day. That's gonna be April 15. We can go there to April 15. There you go. This is the 4 hours. In the 4 hours, we don't get any kind of signal in the meantime. But if we jump to the 1 hour, let's see, April 15, going lower, 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 and lower, and we're up. We're pretty much there. This was April 15. Why is this looking so funny? Okay, pretty much nothing happened on the 15. It's really hard to see right now. Not sure what it's showing me, this gap on the 1 hour. So that's not going to be that good because we were looking here for a daily spot. But pretty much what it's saying, what we're looking is that when we got daily signals, so let's go all the way up here to see what we can get. So look from, yeah, April 15, 2015. Let's go to the 1 hour. April 15. No, I don't know why we can't see that as good as on the other part, but pretty much what I'm trying to predict is the trend from the dailies and then try to spot the good entries from the 1 hour. So look how here this happened, market moves up, came down, consolidate, give us on a signal of kind of a continuation big shadow on the dailies. So if we get that, we are kind of thinking that we can try to trade it on April 24th, 2015, that market to the upside. So let's see. So look, this is the 14th, markets start falling, and look how here we got the engulfing here, bouncing on the 21 moving average after kind of consolidation. And let's see if it happens to be at the time we're looking. It was a bit early, so this was a no-go for me. It ended up going, this huge movement was during the London Open, so we missed that trade, but it ended up running up. So pretty much what we're going to be doing is try to spot better entry points on the daily charts, on the 1 hour charts, that give us a best risk reward ratio on the trades that would love to trade from the dailies. Okay, is that kind of clear?
We've got we've got a few questions here. Yep. Clinton says yep. If you can take them now, you open to that?
Sure.
Okay.
Sure.
Yeah. So I think that clears up that. A couple more questions are coming through, like, for example, engulfing. What do you mean by engulfing? So some people aren't quite familiar with that. As you know, yeah. So go for it.
Sure. Let me see if I can. No, here. Okay. Let me see if I can have the reflector here. I'm going to try to do it with the reflector once again. Devices, Jorge, mirroring. No, it's not showing. Okay, so pretty much an engulfing for me is a bar in which the true body or the real body of the bar engulfs the body of the previous bar. Okay, so I don't look for the shadows or the tails here. So look here how pretty much in this case the market open at the same point, closes below, it engulfs the real body of the previous bar, engulfing bar, market came down. In this case, this is kind of a variation of an engulfing, but look how it ended up kind of engulfing previous bars, go up. If we start moving down on all those examples, look pretty much here, same thing, engulfing bar. This was not an engulfing, but it's big enough to be a dark cloud cover. This is that's a regular candlesticks pattern that work very kind of well. But if we start going through there, look, same thing here. Body engulfing previous body, body engulfing previous body. Where else do I have another one? This is kind of a continuation engulfing. The market kept moving up, but was not on a swing low to think that we're going to be going higher. But look here, engulfing, kind of same scenario. So that's an engulfing bar for me.
Cool, cool. Thanks, Jorge. Other questions. So you're looking at basically from 9 a.m. We talked about that. 9 a.m. London time open. And the wedge. David was wondering about the wedge because I think you had mentioned in passing that there was a wedge.
Oh, I mean, the wedge is simply like the visual form of how the market consolidates during a period of time. It's not the standard wedge of what you can read on baby pips or whatever you're going to be reading, but pretty much look how the market kind of moves, consolidate, and this, I'm calling all this kind of things wedges after the movement. So that's kind of I know it's funny to say a rectangle wedge because a wedge has the wedge, but look there, look how the market then, move up and then prints this kind of flag pennant wedge or however you want to call it. So for me, the wedge, it's simply like the consolidation period that happens after the market shows me something on the daily that let me think. So look, market going up, prints this kind of wedge. Let's see at what time was this happening. I'm not sure what was going on that day, but let's see if we can get something around here. But look, 8 in the morning. This is pretty much Frankfurt and London. Break the wedge during the European session. Next 3 hours, boom, market go up. So that's pretty much like the wedge for me.
Cool. Yep. Thanks for the question, David. So Raphael just wants to clarify. So you wait until the first hour prints, then you wait for consolidation for your entry. I think he's talking about the 1 hour charts. I'm pretty sure that you're not going to take the first hour. The London market opens at 8 a.m., which of course overlaps with the Frankfurt market. So I'm pretty sure you're not taking trades on that 8 hour candle, right, Jorge? You're actually taking them on the 9 a.m. Sorry.
It depends. I mean, if the Frankfurt open, let's say that the 8 a.m. on my chart goes in the same direction of the trade I want to take, I can do it. If the 8 a.m. goes against me, I will wait for the close of the 9 a.m. Because normally what happens is that the 8 goes to one side, the 9 goes to the side I want, so I go with the 9. So look here, market comes up, here is the wedge, here is the 11. So look how here, you know, we didn't have a really big power bar during, I mean, it doesn't have to be always at the close of the 9. It can be early London session. But what I would like to see is the power or the engulfing better if the market touches the 21. So pretty much look how the market moves up, consolidates during Asia, mess around during the end of Asian and start of the London, and suddenly power on London open, boom, market moves. If we go to the other one, look, same thing here. Market moves down. This is pretty much the previous day movement and engulfing. It prints this kind of wedge here, prints the power bar on the second hour of London, and then boom, market falls. Oops.
Cool. All right. So do you take into consideration news? So if you're looking at these 1 hour charts, do you say, well, I don't know, there's a news release coming out or something like that? What do you do with that?
It depends on what the market is doing before. You know, if the market it's consolidating and it's not reacting on time because of the news, I would say that I would take the trade anyway. I've been saying that what the only thing that the news does, it's that they make you take profit faster or make you lose money faster. So I don't pay attention that much to what's going on with the news. Um, but for example, things that I have in consideration, last week I posted the trades on the New Zealand, on the Canadian, on the pound, and and I had another one on the pound yen. And pretty much at the beginning of that movement, like around 5 a.m. Eastern time, that was kind of mid of the London session, the market start moving, and I saw that the New Zealand and the Canadian were not moving as fast as the pound trades, and I knew that later on would be the crude inventories. So what I said was like, okay, if the market's not moving as fast as I want in this case, and I know that the market's waiting for the news, uh, but I know that a correlated pair like the pound, it's moving, I closed the other pairs kind of in a break even, and I said, hey, you know what, I'm not going to take that risk because I know that the market should be moving faster at this point because of the volume. So I said, okay, commodity pairs are not moving faster or waiting for the news release. I prefer to cut short those trades and go with the trades the winning. So I closed them. So it's really, I have them in consideration, and it depends on the feeling I'm having of what the news is going to happen. Of course, all this about oil and how oil is moving around, and the meetings we're going to have this or next week about that, make those news releases really put a lot of pressure on the Canadian. So I decided to close that trade because of that. But normally I don't pay that much attention to the news. I know that if there's a news ahead, that I can be able to take profit faster than expected if the news goes in my favor.
Got it. That makes perfect sense. There's some questions, more questions here for you. Does this really have anything to do with it? Chris wants to know, this really has nothing to do with the T2E system. It's only using the hour patterns to get better entries on your daily patterns, like your daily engulfings. Is that correct?
The thing is that the 2E system, when I tweak it and start mixing it with the naked geisha, that it's more looking for more patterns, you are going to find out that this kind of patterns of consolidation and the wedge actually happen also on the 4-hour charts. Okay, so look, this is a 4-hour chart, pretty much same thing, consolidation after a down move, and then look here, evening star, bam, the market start falling down in a good, kind of in a good spot or in a good point. Let's see when this happened, what time it was. So it was the end of the Asian session. This was the second bar of the day. So pretty much the end of the Asian session was telling me, hey, you know what, look, maybe we're going to have a lot of steam during the London Open. And when people talk about volume, and when Walter, for example, when you say, I don't like to take trades that trigger during the Asian, it's because we have this kind of false movements during the Asian. So if after having this Asian thing or this consolidation and we get this signal on knowing that it comes with a lot of volume, look how it reacts on the next bars, then it consolidates again. Look what happened here. Then we have a 2E trade, but before triggering the 2E trade, the market consolidates, and look how it prints another engulfing on the 4-hour that is part of the naked geisha system. And look that it's happening on the same time on the example we did. This is pretty much the bar of the 10th hour, so it's kind of going good. So the market you can start trading this to go short, And then pretty much what you are doing and what I'm doing, and it's what I'm doing on the videos, it's that I'm not trading the naked geisha or the TUI system just because I see an inside candle. I like to see if those inside candles are actually going with the power or the steam of the daily charts. So it doesn't matter if I'm trading the 4 hours. So look, for example, let's go to the pound. Look the pound on the dailies from the beginning. Look how the market here start making some big red bars start falling. So this is today, Friday, Thursday, Wednesday. On Wednesday, I said, hey, look, I've got this power on the dailies. This is kind of a head and shoulders pattern. I have a lot of steam to go. Let's see what's going on the 4 hours. So when this day closes with a lot of strength, I say, okay, the market might keep at least go and test previous lows. I jump to the 4 hour and look how the market start moving and saying, hey, look, we are having some consolidation after a move. Here, the end of the second bar here of the Asian session, it's really red, big red. You can trade this to go short, and it was a TUI system there. A naked geisha that now is part of the TUI system. Of course, if you were trading the natural TUI system, you were trading this inside candle back here, but this was pretty much happening at the end of the New York session and at the beginning of the Asian. So we say the same thing. If you're going to trade it as a 2E, wait for the confirmation at the end of the Asian or the beginning of the European, and look where this triggered at pretty much the same point, and it came lower. So pretty much what I'm start doing and looking is to trade this pattern in a better from a better point on the 4 hours. And if you don't have and why do I say that it's part of the 2E system? Because sometimes, same thing, if you have the red bar pattern here on the 4 hours that let you think that, okay, look, here I might be going short, you might go to the 1 hour and figure out if the 1 hour gave you an early entry around here, and maybe you were not able to trade. Look how this trade on the 4 hours would be kind of late because you were going to be pretty much selling it here, and you got an early entry point on the 1 hour that let you risk less than the 4 hours. On the 4 you would be risking 80 pips. On the 1 hour you would be risking 50, easily 50, and then you took the movement of the market and took some pips. So it's part of it because you are getting better entry points of the 2E trade or the naked geisha or your trades from the dailies. To answer the question, this is kind of a bit of a webinar called Trade the 1 hour. The idea with this is that any system you trade, if you trade it on the 1 hour or the weeklies, you can put all this information in consideration to see if you can trade it in a better way from the 1 hour. Why do I do it with my system? Because it's the system I trade. So this is the way I'm looking for better entry points of the 2E system and the naked geisha, that it comes all the way from my daily, weekly or daily analysis to get better entry points. But this is not only for the 2E. This is something that you can start testing on any system on the dailies that works on you, and you can figure out how to get better entry points on the 1 hour. Because I'm not entering on the 1 hour just because I see a wedge on the 1 hour or consolidation, because if that 1 hour wedge is not going in the same direction of the dailies or the 4 hours, I'm not going to take it.
Yep. Yeah, absolutely. So you guys, I think that's a critical point that Jorge just made here, which is basically you're not trading the 1 hour chart because you got a 1 hour signal. You're trading the 1 hour chart because you're either looking at a 4 hour 2E or a daily engulfing or something's going on there, and you're just trying to break it down on the lower time frame. We've got a really good question here from Nick Jorge, who says, thanks so much, Jorge. So you've having established a suitable entry, do you have predetermined exits when you trade this way? Is it based on the moving average, for example, in the traditional 2E, or is it based more on support and resistance?
Can you repeat the question, please?
Yes, no problem. This is Nick, and Nick is saying, thanks a lot, Jorge. So now that you have an established entry, a suitable entry point, do you have predetermined exits? Which sorts of exits do you use? For example, with the moving average, which is the traditional 2E exit, where you use that trailing exit based on the moving average angle, or is it based more on support and resistance or number of pips, or how do you typically get out of these 1 hour entries?
I normally go at 1-to-1 risk reward at 1 hour, I move my stop loss to break even. And normally from the 1 hour, I'm looking to 2 hours. Why? Because look here, how if you were trading this 2E, you know, this is the same thing as the 2E that I just measured. So this is the engulfing on the 4 hours. These are the inside bars on the 4 hours, and these were the triggered of the 4 hours. This was, you know, easily going to 1-to-1 risk reward, that it's the normal point in which you take profit on the naked gauge, on the 2E. So you were risking 90 pips and you took 90 pips and the market then came all the way up. So when you're trading on the 1 hour, what you can do, for example, is like, look here, you can entry there from the 1 hour. You can risk less. You know that you have enough room to keep going because of the 4 hour charts are showing you that you should keep going lower. And look how this trades pretty much ended up on the same place. Look, the naked gauge was down here, and the 2 hours of the 1 hour was here. So you ended up having the same movement of pips, but because you get a better entry point and a place where you were able to put a tighter stop loss, you ended up winning twice your risk on the same trade. So after you get there, you can decide to put your stop loss and break even, jump to the 1 hour and say, okay, I'm gonna end my trade when the 4 hours 6 moving average turn up, because I'm trying to get the movement of the 4 hours on the dailies getting a better entry point. Does that make sense?
Yeah. It makes perfect sense. Yeah.
So pretty much this is the actually the real deal why I do it. Look how a trade that you get here on the 1 hour make you 2R here, and it would give you 1R on the 4H. Same trade. So I'm looking for the better entry point and risk reward to get the same movement with a better risk reward or winning proportion.
Okay, cool. Yeah, that makes perfect sense. So just to clarify here, Peter is wondering, you know, do you actually take, like, if you see an engulfing candle, let's say you see a big shadow or an engulfing candle on the daily, you don't wait for the next candle to print because you're already moving to the 1 hour to get in, right? So in other words, like a traditional, like if I'm just trading the daily chart, right, I might
sorry, can you, I'm not sure if internet connection, it's, let me.
Oh, okay. It's all right. I won't, maybe, I think sometimes what happens when you draw on the chart, and talk at the same time. Sometimes it gets choppy or...
Okay. No, no, I'm not hearing you that easily. So I'm gonna disconnect my iPad from the Wi-Fi. So I
Oh,
just get
okay.
my computer there
Okay,
to get
cool.
more signal.
Yeah,
Okay,
okay.
there you go. So can you repeat it?
Yeah, sure, no problem. So there's a couple of questions coming through here. One is, like, for example, if you see a daily candle and you're trading on the daily chart, what I will do is, I think that's kind of what's going on here, is they're hinting at what I would do, or what I normally will show you is, look, I'm going to wait. If I got a bearish big shadow here, I'm going to wait for the market to trade lower than that bearish big shadow to get me in the trade. But what we're doing here is we're saying, look, we've got a really good bearish big shadow on the daily, for example. We're going to drop down to the 1 hour and fine tune the entry here, right? So we're not
Yep.
waiting for the market to trade lower than that big shadow on the daily. We're actually waiting for the 1 hour to show a good signal. Is that correct?
Yeah, yeah, because pretty much the 1 hour that it's going to show us the signal on the beginning or mid session of London, or on the European session, it's saying that it has enough steam to go beyond the level you were looking to break on the dailies. So because look, that pretty much we are looking for the same thing. When you find a big shadow on the dailies, you say, hey, we're gonna wait for the market to trade lower than the big shadow, but I want it to happen after the Asian session, okay? So when you go to the 1 hour and we are seeing that the Asian session, it's moving up or false breaking out or consolidating, we can say, okay, that's great. Asian session was working great. So now we're looking the European to go with a lot of strength and go beyond the low of the previous day, or trade lower than the big shadow. Sometimes that information, that steam, we are gonna get it from the European session at a better entry price and with a tighter stop loss if you can't take the risk of the daily big shadow. But we're pretty much looking at the same thing. You're waiting for European session to break below your trade, your engulfing or your big shadow, and we are trying to get that information ahead. Sometimes it's going to happen at the same time, you know. Sometimes you're going to find out that the bar that breaks the low of the engulfing bar was actually the bar that the same bar that active the 1 hour trade. It will happen sometimes.
Okay. All right, cool. A couple more questions here. Frank, do
Sure.
you consider support and resistance levels in the way when you're looking at your entries or trend
Yeah.
lines? Yeah?
Yeah. I always have support resistance in mind. I am always looking for the market, you know, to sell at resistance, to buy at support. And every time we get, for example, let's say that we are here and we have down here all this support. Of course, I'm trying to sell up here. I'm going to be aware what the market is trying to do with that support. And if it's able to break it, great. If not, I will be looking for the market to see if at that support I will take profit or close my trade. But I always use that. All these lines are lines of support and resistance levels on the weeklies and on the dailies. I'm always looking for that.
Okay, cool. Here's another one. Thank you for that, Jorge. Glenn, I think Glenn was one of the guys who said he trades the 5-minute charts. He says, I know this is a loaded question, Jorge, but what is the success rate of this approach? And Nick was wondering the same thing, saying basically the same question where he says, hey, have you found that you might get more losing trades by doing this, but the winners that you get are much larger
Now,
reward to risk? Yeah.
by doing this with the engulfing bars, these trades can be up to 80% success rate. And because we are looking for reward larger than 1-to-1, because we are going with the flow of the 4 hours and the dailies from the 1 hour, the trades are going to get ended up having not only a bigger win ratio, but a bigger risk reward ratio.
Gotcha. Okay, cool. All right, so there you go. So in some ways, this kind of reminds me of the home run trading system. But I think the key here, though, Jorge, is when you're looking at your higher time frame signals, you make sure those are pretty good, right? Or are you always going with the trend, or are you looking for a good reversal? I guess I'm wondering more about that.
Yeah, I'm always looking for a really nice setup on the dailies, and it doesn't have to be only, for example, the start of the trade, because this is kind of trending systems. Okay, so for example, we got an engulfing here, bouncing on the 21. It happened the next day. It closed like this, higher. So I can start thinking from there, okay, look what happened. Last time it had a run of greens. It did this push, find resistance up here. We are still down here. But the overall trend here, because of the bounce and because we already get from this engulfing, we had the run to up here, the market might keep going higher a bit. So we can start looking for more trades. So let's see what was happening there on the 4 hours. So normally this was the pullback we had here. You were going to be able to enter on the 4 hours here if you like. Then you start having here a 2E trade, some other 2E trades. Here's a naked geisha trade. The market start going higher. But same thing as you can add to your trades, because look, let's see these two things. Let's go for that. This is something, for example, from last week, just to give you an example, okay? So let's say, okay, the market, it's bouncing there. After it bounced, it came, retrace, kind of naked geisha, you were able to go up. It ended up closing. You had more chances to keep going. But what happened if we go to the 1 hour and see what happened on those days there, just to see if the market at that time of London had enough steam? So here was when the market started trading, you know. So when this happened, look here, consolidation, retrace, start going up. Let's say we didn't get any signal here in the 1 hour, but look here how the market on the 1 hour consolidates. Boom, give us something. Let's see what happened at what times. So this was 9 a.m. Maybe the first one was stopped out, normal. Then we get a bigger candle during the Asian, during the European, start going up. Then let's see what happened here. What time was this? Around here. This was American session, put a lot of steam, keep going higher. The market closes here. After it closed, it made the wedge, put some power bars here. Let's see the time of that power bar. 10 a.m. From there, the market keep moving higher, made some pips if you were able. The market's still in a trend. Market finished the day. They ended up over here. Market consolidates. Consolidates here. Put a power bar getting away from the 1 hour, from the 21 moving average. At what time? At 10 a.m. Bam, start moving up. Then it consolidates. And then after consolidation, let's see what time was something like this. Look, Frankfurt went into the direction of our trade. Bam, went up. Okay? So you can start not only trading it from the point of view that your trade starts with engulfing, but after that, if the market keeps going on the trend, as just as the same as we can add to the market on the 4 hours, we can add to do this on the 1 hour, okay? You can still look for options to go long in the 1 hour if you're going in the direction of the trend. So this pretty much what it's making you, it's sweet spotting you better entry points. So that's how you can ended up trading the naked geisha or the 2E trade from the 1 hour when you're doing the same direction of the dailies and the 4 hour.
Cool. Cool. That's pretty cool. So just so we're clear, like we're not saying that everyone who trades this is going to have an 80% win rate. What we're saying is that you're going to, I mean, we're aiming for higher reward risk ratio, right, Jorge? That's what you're going for. And you're looking for
Yep.
reasons that, you know, you want them to be really good setup. So if you're going with the trend and you know it's kind of right after, okay, London's opening, you know, you're getting all these things kind of lining up. And you're trying to get them all sort of pointed in the same direction. So yeah, it makes perfect sense. Thanks a lot, Van. So anything else, Jorge? Anything else you want to share with us, or?
No, actually, well, we have been doing this with the private members of the 2E trade system. They're really excited about it because if people are in London or Australia, you know, Europe or Australia with a better timing to trade the London Open, this is an amazing way to start adding. So we have been doing it from the 2E traders, the private group with them, how I tell them, hey, look, we are having this consolidation, we are having this, we might have an entry on the 4 hours, but if the signal on the 4 hours it's not that clear, we might have a signal on the 1 hour. So pretty much we're mixing this. This is like the evolution of the 2E and the naked trading system. So pretty much what we are evolving is that this private group of traders that are part of the 2E traders are learning how to do this from the point of view of the 2E system and from the point of view of their own system. But we are starting to learn how to apply this 1 hour entries to the higher time frames, okay? So
great.
So yeah,
cool. So if you guys are interested,
sure.
I post that link in there. You guys can go check it out. Jorge, you're a star. It's pretty similar to what I'm doing in my 1 hour trading. Thank you very much. Great stuff. Thanks, Walter and Jorge. Thanks, guys. Must run. Good explanation, Jorge. Thanks, says Glenn. Good, says Nick. Great, guys. Thanks so much for your time. And thank you, Jorge. Thanks, says Clinton. I really appreciate it. Thanks, says Ted. And do you use Twitter, says Tom. Tom, I know Jorge uses Twitter for the trades he posts in the Naked Forex Now forum, but do you also have your own Twitter handle, Jorge?
Yeah, I have. It's SPFAT. I tweet in English and Spanish. So yeah. Of course, it has to be with. I don't tweet that much about trading. I do more periscopes, more in Spanish than in English. But I'm starting to tweet out and do periscopes in English.
Oh, okay, cool. So I just sent that through, so you know how to spell it there, Tom. So that's on there.
At SPFAT.
Yeah, SPFAT. So I just put that through. Thanks, guys. Really great, says Chris. Thanks a lot, Chris, for your time. Thanks, Greg and Darko and Chris and Tom and Glenn. Have a great day, everyone, and thank you, Jorge. We will see you soon.
Thank you for having me here. I hope you like this. And you know, if you want to learn more about this, if you want to get part of the 2E traders, jump to that link and you can start learning more about the naked gauge of the 2E and how you can apply it and how you can do your analysis from the weeklies to the dailies all the way down to get the better entry points on the 1 hour charts.
Great. Thanks so much, Jorge. Take care, guys. Have a good one.
Thank
See
you.
you. Bye.
Bye-bye.